Hello traders and welcome to another video review. Today is Thursday, 20th of January 2022. Let's take a look at the Forex calendar first. Data from Australia dominated the overnight trading session. Unemployment rate is decreasing in Australia from the level of 4.6% to 4.2%. Together with the employment change is going down from 366 to 64,000, which is just slightly above the forecast of 60,000. Part-time employment change is going down as well. 128,000 was the last reading. This time is 41,000 only. So we will definitely take a look at the Australian dollar during the technical part. London session doesn't look that much interesting because there isn't anything important during this session, except maybe producer price index that grow from 0.8% to 5% in Germany, and the consumer price index from the Eurozone that is scheduled for release at 11 a.m. So please keep an eye on this one because there's 5% last reading and it might increase significantly. During the New York session, we have the ECB monetary policy meeting accounts scheduled for release at 1:30, and then some data from Canada, ADP November employment change, 2:30, and at 2:30 is scheduled Philadelphia Fed manufacturing index, unemployment claims, continuing claims, the data from the US as well. Later on, we got existing home sales, natural gas shortage change, and crude oil inventories scheduled for release at 5 o'clock for all of you crude oil traders. So this is how it looks in the calendar. Let's take a look at the Australian dollar first. The Australian dollar at the daily time frame chart is still climbing higher. Recently, instead of ABC simple corrective cycle, we got the wave W and wave X, which means this is already a more time and price consuming pattern developing on the daily time frame chart. This is of course a complex corrective cycle. What we are missing here is the wave Y. The wave Y will most likely hit the level of 61% at 7,345. So please keep an eye on the current development on the Australian dollar. It looks like the 50% of the Fibonacci retracement at 7,274 was the highest level that the correction aimed to achieve, but it looks like it's not the case. It's not the case anymore, and we should be climbing higher as long as we stay, of course, inside of this channel. So please, Australian dollar, keep an eye on another leg to the upside. So what is the situation on the New Zealand dollar? The New Zealand dollar is quite different than the Australian dollar. We still climbing higher here, but recently bears rejected the level of 6,857 and 6,880. As you can see, we got the characteristic pin bar here, so it looks like we might challenge the lower short-term channel line. So if we put channel here, we got first line here. Let me just put the channel actually a parallel channel. So let's say this low, and there's a channel line, and there is an upper channel line. So it's a very nice channel here, not that slopey as the Australian dollar. Still, it is a channel, and any violation of 6,753 opens the road to the swing low at 6,697, and then a possible breakout lower towards 6,502 pips, which is the key long-term technical support for the New Zealand dollar. If we talk about the dollar, let's take a look at the US dollar index. The US dollar index has bounced from the level of 61% of the Fibonacci retracement of the last wave up. However, this bounce hasn't yet hit the level of 96.61. So far 94.24 and 95.50, those two technical resistance levels had been violated. The momentum briefly broken above the trend line and then was capped at the level of 50, so this is the neutral level, but we are still waiting for another leg to the upside. So that means momentum breaking above the level of 50 and entering the positive territory. That means we need to break above the highs of 95.80, which is the high of the 18th of the January, and then head towards the level of 96.61. It still look promising, nothing wrong with this corrective move. It's a clearly corrective move, and this is clearly impulsive move to the upside. So as long as we will not correct for too long, there is still a chance for this market to break out of this channel again and move way higher. You can see the channel right now, very nice channel, nice breakout, then of course sell off and back to the channel again, but the target is 97.70 and 99.10, so please keep an eye on those two levels as well. Let's take a look at the crude oil. The crude oil is still in the uptrend. Let me just show you the wave 3 of the recent up move. High was made at 87.91. This is the top for the wave 3, which means that we are waiting for the wave 4 correction. The level of 77 and 78.23 and 79.45 are the levels of technical support right now. Those levels here close to the recent swing highs. 84.88, 85.93 are as well the levels of the technical support, and we should expect the decline because there is some sort of the like a shooting star candle here on a daily time frame chart. So this looks very serious for our scenario, and we need the confirmation. We need the red bar here, possibly breaking even below 84.88. That would be apparently a very nice confirmation of the wave 3 top. The recent correction, let me just put it correctly here. I'm just talking about the price. 9.81%. The last correction was in the wave 2. So 9% here. If we talk about the same corrections, is, well, it's almost the same as I mentioned, 79.45. So this is the maximum level for the correction to decline, because of course we'll have the same cycle here, and there is no overbalance. So 79.45, the last resort for the bulls, and then of course we are waiting for the wave 5 to the upside to develop. So let's just take a look at gold as well. Let's see what the gold is doing. As you can see, we are still breaking higher. 61% of the Fibonacci retracement has been violated, 1830, and we are developing wave B to the upside. This is definitely some sort of the corrective movement. It doesn't look very much impulsive. However, still the bulls have the control over the market. The momentum is still positive. It's at the level of 62, pretty strong, but sooner or later the wave B will be done and the wave C will start to develop. So for now, next target for bulls is 1848, and then eventually 1877. If we break above 1877, our scenario is invalidated, and that, instead of the wave B, might be some sort of maybe ending diagonal of the whole move up. However, as you can see, it doesn't actually look impulsive at all. it might be some sort of even more complex and time-consuming correction instead of the ABC to the downside, because that would mean ABC up, wave X, ABC up, and that's a W. So that's a complex correction, which is nothing really exciting, which is nothing nice for the traders, because it's full of the whipsaws, false breakouts, and so on. So please just keep an eye on the gold, and we will see how the market will develop this situation. The key supply zone is located between 1900 1916. So last but not least, Bitcoin. As you can see, Bitcoin is still trading inside of this channel, and the bulls are sleeping. They are still sleeping. Yesterday, a red candle here. They don't have any momentum to break out of this channel, and they are dangerously close to the level of 39,540. Any violation of this level and a sustained down move with, without any lower wick like this, but the body of the candle closed very, very near the end of the candle, means that we are entering a downtrend in Bitcoin if that happens. So far it didn't happen, so that's the alternative negative scenario for Bitcoin. But any show of strength in form of the breakout first out of the channel above 44,409 and then 45,429 is show of strength, which means that the momentum might approach the level of 50, the neutral level, and then break to the upside. So far, nothing like this behavior is being present on the daily time frame chart of the Bitcoin. So we still have to wait for further development on the Bitcoin. That's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye-bye.